Hi guys, welcome back. In this video, I'll be breaking down the latest earnings report of AMD and I'll provide my assessment on where I think AMD price is heading. AMD announced another remarkable growth in the last quarter. Revenue increased by 54% year over year and the gross margin improved further to 48%. And the earnings per share is up by a whopping 134%. All the numbers are up compared to a year ago. What a pretty picture. What a solid company. But the markets sold off from 128 and settled at 120 for the week. Let's look at the report in detail to see whether AMD is still a buy or a sell at the current price. The revenue has been trending up in recent quarters, and AMD's outlook for the next quarter is a further year over year growth of 39%. And the best thing is, the growth is expected across all their business segments. The revenue did not grow purely based on the volume of sales alone. The higher revenue was also driven by higher ASP or average selling price. It shows that AMD is gaining popularity and is delivering higher value, resulting in a premium for their product. AMD is competing on many fronts. Two of their major competitors are Intel in the microprocessor space and Nvidia in the GPU space, and it is good to see that both segments are reporting higher ASPs. The cost of revenue has also risen in tandem as expected. After taking away the cost of revenue, the gross profit came in at $2.1 billion and the gross margin has improved to 48% and has been improving quarter on quarter. The R&D and sales and general admin costs have accelerated in recent times, but when we look at it from the percentage of revenue, the sales and general admin has dropped compared to the revenue from 12.6% in 2016 to 8.7% in the most recent quarter. The R&D cost has dropped from 29% to 17.7% and has remained flat in recent quarters. This even as the revenue has been hitting record levels. There comes a point where a company hits high gear and gets into a cruising mode, and it looks like AMD has just done that. After accounting for other income and expenses, the net income came in at $923 million and net margin increased to 21.4%, and that resulted in an earnings per share of 75 cents. We end the income statement analysis with the PEG ratio that registered 0.69. The PEG ratio is low due to the high year over year revenue growth. It shows that the price has not appreciated at the same rate as the revenue growth and makes AMD a value buy at the current price. The operating cash flow remains healthy. The recent slowdown here is due to changes in working capital and deferred income taxes. Since AMD outsources most of its manufacturing, it does not require heavy capital expenditures. It only invested $85 million in capex for this quarter. That results in a strong free cash flow for AMD, and that is evident in the growing cash position. AMD has finally turned a big corner and is reaping the benefits of growing microprocessor and GPU space. And they probably have one of the best business models in the semiconductor market. Unlike Intel that manufactures its products requiring heavy capital expenditures, AMD outsources their manufacturing and focuses on the design and development of the processors. And AMD has virtually paid off all of its long-term debt. So why did the share price tank? I think it is due to a combination of few factors. Firstly, the PE ratio is 37, making it pricey currently. And the price to book is 20.6, which is also very high. And Intel's PE ratio is only 9.6 and the price to book is 2.23. That is like night and day between the two giants. Sure, Intel is not growing and is not expected to grow for the next 1 to 2 years, but they are still profitable and they are still the microprocessor market leader. That could be one reason why AMD's price dropped, as investors shifted to take advantage of Intel's low valuations. Let's take a look at the technical analysis. Here's the weekly chart that shows the trend from 2019. AMD is spotting two long needles at the 125 price level. It got turned down at this level in a strong way twice over 2 months. When I plotted the trend channel, I found three well-defined trend lines here. There are two at the edges and one in the middle. The long needle also formed in September 2020 when the price hit the top trend line. This makes the top trend line a strong resistance, and each time the price hits this trend line, it dropped back to the middle trend line. So it is likely that AMD will drop back to 108. It might even drop back to the $100 mark. The MACD histogram is also spotting a divergence similar to September 2020. The other big reason I would not be buying AMD is due to the recent share buyback. They have been buying up their shares in a big way recently, and that is probably helping to push up the price. And I think AMD is buying back its shares due to the pending Xilinx acquisition that is to be fully paid by shares issuance. So AMD has to keep the price high to ensure the price disparity between AMD and Xilinx shares remains within a certain band. Each Xilinx share will receive 1.7 AMD shares, and so the price disparity needs to be close to this ratio. AMD might not continue its share buyback program when the merger is completed, taking away the price support, and that might result in a deeper correction. So while AMD is a fantastic company and is firing on all cylinders, it is overpriced at current levels. There is downwards pressure from the technicals, and the pending Xilinx merger poses questions on the impetus for further price appreciation. I'll have to pass AMD at this level and wait for things to settle down. Please subscribe if you found this sharing useful and hit that notification bell so that you don't miss out on any of my future videos. Thanks for watching, and I'll see you in the next one.